Okay, we'll start now. Okay then. One or two questions we'll solve based on the concepts which we have done. But before that, small discussion, 2-3 discussions are remaining that we'll finish. Yes or no? Okay. Pay attention. See, municipal tax. After you calculate the GAV, after you calculate the of any property, what do you do with that? From that GAV you get the deduction. Deduction for municipal tax. Remember one thing, municipal taxes are allowed on payment basis. And what is municipal tax? Any tax for your property by whatever name. It can be corporation tax, it can be water tax, it can be sewerage tax, it can be by any name. Yes or no? But that tax which you pay to the local authority, meaning the corporation, that tax is known as municipal tax. Any tax other than this, even if paid on property to state government, will not be allowed as a deduction. So what is municipal tax? Municipal tax is a tax relating to the levied by the examples: corporation tax, local tax, house tax, property tax, water tax, sewerage tax, etc., etc. It can be by any name, but you have to remember it has to be levied by, only then it will be known as, and only then you are going to get the deduction. Meaning that, for example, if taxes related to the property but levied by, so if the taxes for your house property are levied by state government, are levied by, you will not get any deduction for such taxes because these taxes are not treated as municipal tax. Yes or no? Number one. Number two, municipal taxes will be deducted from GAV only if they are actually during the, and they are paid by the owner. So if you are an owner and you have paid it during the relevant previous year, only then the deduction will be available. Yes or no? Now few examples. See, if in this year your GAV is 3,50,000 and your municipal value 3 lakhs. On that 10% the municipal tax is charged. So usually the municipal tax is charged on municipal value by the local authority. So the rate was, so how much will be the 10% of 3 lakhs? So municipal taxes levied by the local authority is 30,000. Out of that 80% is paid. Out of that, and 20% is, forget about this 20%, you are not going to get any deduction for this because it is outstanding, it is not paid. So 80% which is paid can be claimed as a, but out of that 80%, owner has paid 50% and tenant has paid 50%. So how much deduction you will get? Entire 24,000 or only 12,000? So out of the GAV of 3,50,000, instead of taking the deduction of 30 you cannot take. Why? Because 6,000 is outstanding. So you can take 24,000, but this entire 24,000 is not paid by the owner. How much out of this 24 is paid by the owner? So out of 3,50,000, the deduction of 12,000 will be available and your NAV will be 3,38,000. Will you be able to identify like this? Yes or no? Okay. Now, for different years, GAV is calculated. Okay, no? Now, municipal taxes levied is 4,000, 5,000 and 7,000. For every year, this is the amount of municipal tax. And how much is the owner paying? Nil. First 2 years, no municipal taxes were paid. Even if levied was 4,000 and levied was 5,000. But did you pay that 4 and 5,000? No. This year, 7,000 was levied. This 7,000 is also paid in this year. Hello? And 5,000 is also paid in this year. And this 4,000 is also paid in this year. So the entire municipal tax which you have paid in this year will be allowed as a deduction in this year. Yes or no? Even if it does not relate to this year, still it will be allowed as a deduction in this year. Will you remember this? Because 4,000 was levied, but you did not pay that 4,000. So in that year, there was no deduction available to you. So your GAV was 2,50,000 in that year. 2,80,000 was your GAV. 5,000 was the what? Municipal tax. But did you pay that 5,000 in that year? No. So no deduction of that 5,000 was also allowed. Hello? So that year also your entire GAV got taxed. But now this 4,000, 5,000 is paid in this year along with 7,000 of this year. Getting my point? So how much is paid in this year? This year 7,000 is also paid, and earlier years 9,000 is also paid. So this year the total deduction will be 16,000. Yes or no? And your GAV will be 2 lakh, sorry, NAV will be 2,84,000. Understood, sir? Everyone? Now suppose in the above example, municipal tax of 10,000 for next year is also paid in this year. Possible? This is the case where the municipal tax is paid in advance. Although the municipal tax is for next year, but it is paid in this year, it will also be allowed as a deduction because the deduction is available on payment basis. Will you see that to which year municipal tax relates? No. Municipal tax can be related to any year. But if you have paid the municipal tax in your previous year, it will be allowed as a deduction in previous year itself. Whether the municipal tax relates to the current previous year, earlier previous year or subsequent previous year will not make any difference. If it is paid in this year, it will be allowed as a deduction in this year only. Payment basis. Yes or no? Hello, sir. Now see, note number 1. Municipal taxes, outstanding or payable. Allowed or not allowed? Not allowed. Municipal taxes paid by the tenant. Allowed or not allowed? Not allowed. If municipal tax is given as a percentage, apply that percentage on the value of municipal value. You will get the municipal tax amount. Yes or no? Because municipal taxes are always charged by local authority on the amount of municipal value. So apply that percentage on the municipal value, you will get the amount of municipal tax. And if it is paid in this year, it will be allowed as a deduction in this year. It has to be paid by the owner. Yes or no? Any taxes related to property not levied by local authority but levied by state government will be allowed or will not be allowed? Will not be allowed. Municipal tax penalty you are paying. Municipal tax will be allowed, but municipal tax penalty will not be allowed. Now, if there is one SOP whose annual value is exempted under section 23(2), if there is one SOP whose annual value is exempted under section, for this SOP, even if the municipal tax is paid in this year by the owner, still you are not eligible to claim deduction because its annual value is exempt. So, for your SOP, municipal tax deduction is not available. Yes or no? Next one. Now, this note number 7, no, I will be doing this note along with this concept. Property situated outside India. Wait for some time, I will discuss. Okay, no? So, this was your municipal tax. Now, first of all, tell me, when you will calculate your NAV, how will you calculate your NAV? Tell me. First of all, you will take GAV. Yes or no? From this, you will reduce municipal tax. So, the final amount which will be there, will be NAV. My question is, NAV can be positive or not? NAV can be negative or not? NAV can be nil or not? Can your NAV be positive? Yes, in many of the cases it will be positive. Majority of the cases it will be positive. But can your NAV be negative or nil? Can you have a negative NAV or a nil NAV? The answer is yes. If the amount of municipal tax deduction is more than your GAV, then your NAV can be negative also. Yes or no? And if the amount of municipal tax deduction and the GAV amount both are same, or in the case of SOPs, or in the case of where GAV is nil and no municipal tax deduction is available, NAV will be nil. So your NAV can be positive also, NAV can be negative also, NAV can be nil also. Yes or no? Everyone. Now tell me, if there is a property which is LOP or which is DLOP, which is deemed to be let out property. Yes or no? In this case, your NAV can be positive also, it can be negative also, or it can be nil also. All the three possibilities are possible. Yes or no? But if your property is SOP, so for SOP, your NAV can be positive, can be negative, can be nil. Tell me. These two possibilities are not possible. Only the NAV will be nil in case of SOP. Why? Because GAV has to be nil and no municipal tax deduction is available. So NAV has to be nil in case of. So these three possibilities are in the case of LOP or DLOP only. Yes or no? Now, once you arrive at the figure of NAV, now you are going to get two deductions. How many deductions? First one, standard deduction is at the rate of 30% of. Yes or no? Now please remember one thing, section 24A, 24 clause A clearly says that the standard deduction at the rate of 30% of NAV will be available only if the NAV is negative or no standard deduction will be available. So standard deduction will be claimed only if the NAV is positive. If NAV is negative or nil, standard deduction is not available. Yes or no? Now what is this standard deduction? Standard deduction is a fixed amount of deduction. Nothing more, nothing less. It is a fixed amount of deduction which everyone will get out of positive NAV. This is given to cover the expenditure which you might incur on your property. What type of expenditure? For example, repairs of the property, insurance of the property, rent collection charges are there. The property might be situated on some land and that land is taken on rent, so ground rent etc. you are paying. So there are n number of expenses which you can incur. So to cover up all such expenses, the standard deduction is given. Don't come and claim those expenses separately from us. Take this 30% standard deduction, this will take care of all your expenses. Yes or no? So with respect to the property, if you find any of the expenses, exclude or ignore those expenses because those expenses are already taken care of by 30% standard deduction. Yes or no? Repairs to property, what will you do? You will take the deduction or you will ignore? Ignore. Insurance premium of the property, you will take the deduction or you will ignore? You will ignore. All the expenses of the property you are supposed to ignore because all are covered by 30% standard deduction. Yes or no? Now somebody will ask that, sir, what if my expenditure which I am incurring on the property is more as compared to 30%? Still you are going to get 30% only. Why? Because even if your expenditure are less or you are not incurring any expenditure, still you get flat 30% standard deduction. Getting my point, everyone? So if no expenditure is incurred, still you are getting 30%, and less expenditure is incurred, still you are getting 30%, then don't come to us when your expenditures are more. In that case also we will ignore your expenditures and will allow only 30%. Yes or no? Hello? Did you understand the logic for 30%? Now pay attention. Two expenditures you are not supposed to ignore. Number one, municipal tax, because that is separately allowed from your GAV. And number two, interest on housing loan, which we are going to discuss now. Number one, municipal tax. Number two, interest on housing loan. For these two expenses you will get deduction. But other than this, any expenditure relating to house property. You are supposed to ignore all such expenses, because to cover up all such expenses, the 30% standard deduction is allowed. Yes or no? 30% standard deduction is done. Now next one is interest on housing loan. Now pay attention, sir. Interest on housing loan. What is housing loan? Somebody's phone is ringing. Please put it on silent mode. Yes, sir. What is housing loan? Housing loan means capital which you borrow, means loan which you borrow for the purpose of house property. For the purpose of house property. What purpose? Construction, purchase, repairs, renewal, reconstruction. Meaning the amount you will borrow, and that borrowed amount will be used for these purposes. Then that borrowed amount, then that borrowed capital, then that loan will be treated as housing loan if that loan is used for these purposes. Yes or no? What purposes? Construction, repair, purchase, renewal, reconstruction, etc. of your house property. Yes or no? You have taken a loan for your daughter's marriage. Is it a housing loan or it is a personal loan? So interest on your loan which you have taken for your daughter's marriage will be allowed here or will not be allowed? What if you have taken an education loan for your son? Is it a housing loan? Is the money used for house property or money is used for education of your child? Education of child. That is an educational loan. Yes or no? What if you have taken a loan and that loan you are using for business? That becomes your business loan. Hello? So loan must be used for the purpose of house property. Amount of loan must be used for house property. Construction of house property, purchase of house property, repairs of house property, renewal, reconstruction, etc. Yes or no? So did you understand the meaning of housing loan, everyone? Now on this housing loan, interest will become due. Interest will become in the previous year. So during the previous year, some interest becoming due, some interest becoming that interest, entire interest which becomes due in the relevant previous year will be allowed as a deduction in that previous year itself on due basis. On what basis? Due basis. Entire amount of interest will be allowed as a deduction if the property is LOP or DLOP. If the property is LOP or DLOP. But what if the property is SOP? Then entire interest which becomes due for the relevant previous year will be allowed, subject to maximum 30,000 or 2 lakhs as the case may be. Wait. Sir, municipal tax is allowed on what basis? But sir, you are now saying that the interest is allowed on due basis. These questions must creep up in your mind as a CA student. Why the different treatment, sir? Why municipal tax is allowed on? And why this interest is allowed on? Understanding or not? Anyone has any answer for this? Come and tell me. Simple. Under the head house property. Under the head, this is my head, income from house property. Some income will be taxable. Hello? Minus deduction for some expenses will happen. Then the final income will be there. Hello? What income is taxable under this head? The rent which you are earning. That rent will be taken for the calculation of your income, annual value. Hello? So what is the income which you are earning? Rent, which is getting taxable under this head. And what are the expenses which are allowable under this head? Only two expenses. One, municipal tax, and second is interest. Hello, sir? But wait, if you remember actual rent, what did I say? Actual rent is the rent for the period for which the property is actually let out during the previous year, whether received or receivable. Meaning, can I say actual rent is your income which is taxable under the head house property. On what basis? Whatever rent becomes due in this year, whether you have received or it is still receivable, which you know as actual rent, is getting taxable in this year, no? So bloody, if you are taking the taxable income on due basis, then the expenses should also be allowed on. Hence the interest is allowed on. Getting my point? Then sir, in that case, if that is the logic, the municipal tax should also be allowed on. Then why it is allowed on payment basis? Reason is very simple. Municipal tax is a statutory due. It is an amount which you are supposed to pay to the local authority. And just imagine if the municipal tax is also allowed on due basis. Will you ever go and pay the municipal taxes to local authority? Local authority will keep on, screaming, please pay the municipal tax, please pay the municipal tax. And you will least bothered about that. Why? Because even if you have not paid that municipal tax to the local authority, it is still allowable on what basis? Due basis. You are going to get the deduction. Hello, sir. So the government wants you to clear those dues on time. Hence, if it is allowed on due basis, you are never going to clear those dues on time. So, to compel you to pay those municipal taxes on time. If you want to claim the deduction here, you have to first pay it and only you can take the deduction. Getting my point? But for interest payment, government is not bothered because you might have taken interest from any Tom, Dick or Harry. You might have taken the loan from any Tom, Dick or Harry. Hello. And for that, the interest payment, if you make or you don't make, the amount is not going to come to government or any local authority, no? Hello. So, if the income is taxed on what basis? Due basis, then the deduction should also be available on due basis. Hence, the interest deduction is on due basis. But the municipal tax cannot be allowed on due basis because if it is allowed on due basis, nobody will bother to pay the municipal taxes. Will you remember this? Sure, no? Now tell me, what is interest? Interest on housing loan. So, first of all, you will have to take housing loan. Now, whenever the repayment happens, so there are two parts of repayment. One is principal and another one is. So what is allowed under 24 clause B? Entire repayment or only the interest component? Only the interest component under the head income from house property will be allowed under 24 clause B. Yes or no? What about this principal? Can you claim this principal under the head income from house property under section 24 clause B? Can you claim it? No. But remember, this principal can be allowed as a deduction under section ATC from your GTI subject to certain condition. That we'll check later on. Hello, sir? Yes or no? So what about the principal payment? Principal, you will claim it as a deduction while calculating your house property income? No. Forget about principal whenever you are calculating your house property income. Yes or no? But that principal repayment can be claimed as a deduction from your GTI under section ATC subject to certain condition that we are going to see later on. Yes or no? But under the head house property, only you are supposed to take the deduction for interest. Interest on housing loan. Very good, very good. Now pay attention. Interest on housing loan. Now you are supposed to calculate this interest for your previous year. So you are supposed to see that in this previous year, interest on housing loan due. How much the interest on housing loan is becoming due in your previous year? starting from 1st April 24 to 31st March 25. Entire interest which will become due in this year. whether paid or payable will not make any difference. This interest you are going to claim as a deduction. But see, if this interest which becomes due in this previous year, if this interest is for LOP or DLOP, what was the status of your property in this year? LOP, DLOP. So can I say the property which is LOP in this year, the property which is DLOP in this year, for this property you might have taken some loan, and on that loan this interest is calculated. So this interest is for LOP or DLOP only, no? Will be allowed as a deduction without any monetary limit. This will be fully allowed. Yes or no? Yes or no? Hello? Now what if this interest is related to SOP? This interest is related to, then without any monetary limit? No. There is one monetary limit. Monetary limit of how much? Either 30,000 or 2 lakhs, as the case may be. So now when 30,000 limit will be applicable? In all the cases. In all the cases you will apply 30,000 limit. But one special case is there. One in which the limit of interest will not be 30,000, the limit of interest will be 2 lakhs. Limit of interest will be . So, what is the case? Tell me. Number 1. 3 conditions I am saying. How many conditions? If all the 3 conditions are fulfilled, then the case is special case. Then for this interest, instead of 30, you can take a limit of, then you can take the limit of 2 lakh. Pay attention. When will you take the 2 lakh limit? Number 1, loan taken on or after 1st April 99. First condition. Second condition, the loan is taken for purchase or construction of house property. Yes or no? So that SOP for which this loan is taken, that SOP for which the loan is taken, this loan must be taken on or after 1st April 99. And this loan must be taken for purchase or construction only. And the purchase or construction must be completed. Must be within 5 years. 5 years from the date of taking the loan, from the end of the financial year in which loan was taken. So first you will have to check in which year the loan was taken. In which year the loan was taken. Where is this? He's outside, see? No one is outside. Call no, please. Call someone. These ACs are working. This AC is working. This is on. Not on. How did it start all of a sudden? Phone. Decrease the temperature. 20. No. 24. Where are you, Tambi? Where do you go? Stay here only, no? ACs are not working. This side is also off. You don't want? Okay. At least keep this remote over here so that I can switch it on and switch it off. Give. Thank you. Increase the temperature. It is not working, I guess. Okay. Okay. So see, the SOP for which the loan was taken. SOP for which the on that loan interest will be allowed. Interest will be subject to maximum 30,000 or 2 lakh. Always the limit has to be 30, but sometimes the limit can be. When the limit will be 2 lakhs? If the loan is taken on or after for the purpose of purchase or, and this purchase or construction for which the loan was taken, this activity should get completed within 5 years from the date of taking the loan. No. The year in which the loan was taken, 5 years from the end of that year. Yes or no? If the loan was taken in 18, what date the loan is taken? Date is not important. The loan was taken in 1819. So end of 1819 will be? End of 1819 will be 31st March 2019. 31st March 2000. 5 years from that day. 5 years. So can I say 31st March 2020, 31st March 2021, 22, 23, 24. On or before 31st March 2024, the construction or purchase activity should be completed. If all these three conditions are fulfilled, only then the interest limit will be 2 lakhs. In every other case, the limit will be? So tell me, if I have taken a loan for repairs, on that, if I pay the interest, will that interest be allowed as a deduction? Yes, because loan is taken for repairs. Hello, sir. Loan is taken for the repairs of the property. That is a housing loan. But on that, I can never take 2 lakh rupees of limit. Limit will always be 30,000. Even if I finish the repairs within 5 years, even if the loan was taken on or after 1st April 99, will not make any difference. Only the loan taken for purchase or construction. On that loan, interest will be allowed to the extent of maximum 2 lakhs. Getting my point? For repairs loan, how much interest can be claimed? Maximum. But even that interest will be fully allowed if the property is LOP or DLOP. For LOP, DLOP, don't check all these things. Getting my point? Purchase, construction, repairs, renewal, reconstruction, etc., etc. of LOP or DLOP. For that, whatever loan is taken, whenever the loan is taken, there is no such restriction. Claim the entire amount as a deduction. Claim the entire interest as a deduction without any monetary limit. These things will become complicated only in the case of SOP. Yes or no? Now tell me, this limit of 30,000 or 2 lakh is available for one SOP or both the SOPs of one assessee? This limit is given for one assessee. One, one assessee for his one SOP or two SOPs taken together. Two SOPs taken together. Meaning that this limit of 2 lakh or 30,000 is available to one assessee. So if I am an assessee, for my single SOP or for both of my SOPs taken together, the maximum interest I can claim cannot be more than 30,000 or 2 lakhs. Yes or no? Will you remember this? This is important. Nah? They exploit this point in the exam. And how this will come in the question, I will tell you. When we'll be solving one or two questions right now. Okay, no? This concept we will exploit. Now, this was your interest for housing loan. Yes or no? If property LOP, DLOP in this year, property LOP, DLOP in this year, whatever interest becomes due, will be fully allowed as a. Now tell me, next year, the status of the property remains same or it can change also? Sure. Next year, tenant vacated the property and I occupied the property. Next year, the property is SOP. Now, whatever interest which will become due in the next year, will not be allowed fully, will be allowed subject to limit of 30,000 or 2 lakhs. Can I have a property in this year? This year my property is SOP. This year my property is. So this year whatever interest becomes due will be allowed subject to maximum 30,000 or 2 lakhs as the case may be. But it is not necessary that the property will remain SOP in the next year also. Can I say next year the property becomes my LOP or DLOP? Yes or no? So next year whatever interest will become due on the same property, it will be allowed fully without any monetary limit. Will you remember this, everyone? So now pay attention. Interest on housing loan. Meaning of housing loan known. Interest is allowed as a deduction under section 24B. On what basis? Interest due in my previous year on housing loan, whether it is paid in this year or outstanding in this year, shall be allowed. Even the interest of this year is paid, interest of this year is still payable, will not make any difference. That interest will be allowed. It will be allowed fully without any limit, monetary limit if the property is. But this interest shall be allowed subject to a maximum limit of 2 lakh or 30,000. If the property is, always the limit is, but when the limit will be taken as 2 lakh. These three conditions I have already explained. Yes or no? First condition, loan must be taken on or after 1st April 99. The loan is taken for the purpose of purchase or construction of the property, and purchase or construction must be completed within 5 years from the end of the financial year in which the loan was taken. Yes or no? Now there is no requirement that this loan you have to compulsorily take from any bank. You can take it from any financial institution, any bank, even from a private party also you can take this loan. You can take this loan from your employer also. Hello? There is no specific requirement that this loan must be taken only from bank. Only then the interest will be allowed as a deduction. This can be taken from any institution. Yes or no? Even your employer can give you this loan. But on that, it has to be proved that you have taken a bona fide loan and you are actually paying the interest. Yes or no? So it becomes your duty, your responsibility to prove that the loan was taken by you from the lender. You are a borrower, the opposite party is a lender, you are actually giving the interest. Yes or no? And it is usually proved through the loan agreement. So there has to be a loan agreement between you and the lender. Proper repayment schedules should be there. Loan payment, interest payment is proved through your bank statements and all. Yes or no? Only then you get this deduction. Just because you say that I am having a housing loan and on that I have paid the interest, you are not going to get that deduction. You have to prove it. Getting my point? Next one. Now, if principal amount of housing loan is repaid during the previous year, will you get the deduction under 24B? No. For that principal amount of housing loan, the deduction is available under 80C from your JTI, subject to certain condition. That also I have explained. Now, there are certain expenses when you take the housing loan, like commission, brokerage, processing fees. Sometimes you give the application to the bank to get a housing loan. So the bank sometimes charges what? Processing fees. Some person, he is helping you to take a housing loan, so that person might charge what? Brokerage, commission, etc. Are these expenses incurred exclusively to take housing loan? Yes. Still they will not be allowed as a deduction. Even if they are taken, they are incurred to take the housing loan, still these expenses will not be allowed, because only the interest which you pay on the housing loan, interest which is payable on the housing loan, will be eligible for deduction. No other expenses, even if they are exclusively incurred to take the housing loan, those expenses will not be allowed. Yes or no? Yes or no? Sometimes you delay in the payment of interest to the lender. So the lender has given you money, so lender wants you to pay the interest on time. But sometimes you delay in making the payment of interest. So that lender will charge interest on interest for the delay which you commit. Yes or no? Usually what happens, the banks from whom you are taking the loan, so EMIs become due on a particular date. EMIs include what? Interest also. And if the EMI is not paid on a specific date, then the bank would charge extra interest on the interest component. That is known as penal interest. That is known as interest on loan we are going to allow as a deduction. But interest on that interest we are not going to allow as a deduction. This penal interest, the moment you will see, you will have to ignore, because this is not interest on housing loan, this is interest on interest. This is not allowed as a deduction. So the moment you will see, you will have to ignore it. Now you have one house property which you have mortgaged with a bank, and by mortgaging it with a bank, the bank has given you a loan, and by this loan you have acquired another house property. Possible or not possible? For example, in Chennai you are having one house property. Okay, that house property you have mortgaged with the bank. Now the bank is giving you some loan, and from that loan you are taking another house property in Hyderabad. Possible? Possible? Sure. Now how many house properties you are having? Two. First one is mortgage, you are still the owner, you have just kept the property as a security. Yes or no? Now you are having one house property in Chennai which is mortgaged to the bank. If you default in making the loan repayment or interest, then only the bank will take away that property. But still you are the owner of that property. Yes or no? And by taking the loan, by mortgaging this property, you are having another property's ownership in Hyderabad. Now how many properties you are having? So the annual value of both the properties will be calculated, because you have two house properties. You are the owner of both the house properties, and both the house properties are not used by you for your own business or profession. Both the house properties will fall under the head house property. Now you will calculate the annual value of both the properties. Tell me yes or no. Now problem will be, you have two house properties, but you have only one housing loan. See, this is a loan. How many loans are there? Only one loan you have. Yes or no? Now any interest on this loan, now you will be confused whether I should take the interest deduction on this loan from annual value of house property 1, or should I take the interest on loan deduction from the annual value of house property 2. From which property the interest will be claimed as a deduction? 1 or 2? Why 2? Because the loan is taken for purchase of, the loan is used for this property. So any interest on that loan has to be allowed out of the annual value of this property only. House property 1 was just kept as a mortgage. It was kept as a security. And the loan amount taken is not used for house property 1. So the interest on that loan cannot be claimed as a deduction from house property 1. It will be taken from house property 2 because the loan was used for house property 2. Will you remember this? Hello sir. So not from 1, it will be available from annual value of 2. Yes or no? Now you have taken a loan from HDFC Bank, housing loan. Yes or no? How much loan you have taken? You have taken some X amount of loan. Right now you have not taken, you have taken this loan long back. Now this loan you have been repaying. Beginning of this year, the loan amount outstanding is 20 lakhs. Still 20 lakh rupees housing loan is outstanding, which you are supposed to give to HDFC Bank. Now the rate of interest on this loan was 12% because at the time when you took the loan, the rate of interest was high, 12%. And you have not taken a fluctuating rate, floating rate interest, floating rate loan, you have taken a fixed rate of loan. Meaning that even if there is a change in the rate of interest by the bank, your interest is not going to change, your interest will remain same, 12%. Getting my point? Hello? So the time when you took the loan, at that time, the loan were costly, the interest rate were high. Yes or no? But right now, the interest rate have come drastically down. Now the interest is somewhere around 8 to 10%, 8 to 9%. Yes or no? Now you saw that ICICI Bank is offering a loan for only 8%. Only? Now you will think that shit, I would have taken this loan from ICICI Bank at floating rate. Yes or no? Because I would have paid less interest as compared to what I am paying right now. So you approached ICICI Bank and told the ICICI Bank that bank, I have taken a housing loan from HDFC Bank which is still outstanding amounting to rupees 20 lakh. Can you do something for that? Because on that I am supposed to pay 12% interest. So ICICI Bank is telling you, don't worry, take 20 lakh loan from us at 8% and repay your old loan. Now instead of you being a borrower of HDFC Bank, now you will become the borrower of ICICI Bank. And instead of paying 12%, now you are going to pay only 8%. Getting my point? Now can I say you have taken a fresh loan to repay your old housing loan? Yes or no? On this fresh loan also, whatever interest you are paying will be allowed as a deduction under 24 clause B, because this fresh loan shall also be treated as your housing loan only. Done, sir? Everyone? Now, this is the most important part of interest. Till now, whatever we have discussed, everything is manageable, everything is easy only. Yes or no? But this is the most important part. See, I will try to make this part simple for you. Okay, this example which is given here, okay, this example you see at home today. Okay, but I will try to make this example more easier for you by making this example once again over here. Okay, tell me, this is a small timeline which I am making for you. Okay, small timeline. In this timeline, what is my previous year? This is our previous year, 24, 25. Prior to this, 23, 24. Prior to that, 22. And prior to that, 21, 22. And prior to that, 2021. Yes or no? Now pay attention. In the year 2021, on 1st of June 2020, on 1st of June 2001, housing loan of rupees 10 lakh at the rate of 12% per annum interest was taken for the purpose of construction of the property. Property is there or property to be constructed? Property is not there. There does not exist any property. Property will be constructed. Yes or no? Now see, it is possible that you might have already started construction and now the funds are short. So you are taking this loan to finish the construction. Yes or no? Or it is possible that you don't have the money only to start the construction, meaning that you are taking a loan and then you are starting the construction. Yes or no? You don't have to be bothered about the date on which you have started the construction, because the bank is not going to charge you interest with effect from the date on which you start the construction. The bank will charge you interest from the date on which you take the loan. So the construction can be started prior to this date also, after this date also. Yes or no? Don't bother about date of starting the construction. When the construction was started, none of my business. When the construction was started, none of my business. I am interested in when the loan was taken, because from that date only the bank is going to charge you interest. So when have you taken the loan? You have taken the loan on 1st June 2020. Yes or no? By taking this loan, the construction is happening. Construction is going on. Construction is going on. Construction is. Some day will come when the construction will get over. Some day will come when the property will be completely ready and the construction is over. Yes or no? That date is known as DOCOC. Date of completion of construction. What will you call it? DOCOC. Date of completion of construction. Now let's say on 30th June 2024 the construction got completed. This is the date of completion of construction. Yes or no? Now tell me, in 24-25, my question, listen to my question very carefully, then only answer. In 24-25, do I have a house property? Construction is completed. Now do I have a house property in 24-25? Yes. I am the owner of this house property. And the house property is not used for my business or profession. So will I calculate the annual value of this property in this year? So whatever interest which will become due for this entire year, even before the completion of construction and even after the completion of construction, can you see color, yellow color, green color? Color, yellow color is what? Before the completion of construction. But that period is in my previous year, no? 1st April to 30th June. Period is in my previous year. And then 1st July to 31st March. That period is also in my previous year. Whatever interest which becomes due in this previous year, starting from 1st April till 31st March, entire interest will become due in this year, will be allowed as a deduction in this year. So I am not worried about this interest, because this interest which becomes due for this period will be allowed as a deduction in this period only. Yes or no? But tell me, what about the interest prior to this year? This interest was not allowed, because see, here you paid interest for, even this was not allowed, because there was no house property, If there was no house property, annual value could not be calculated. If there is no annual value, There is no house property. Hence, there was no deduction for interest for that period. Even though the interest was interest on housing loan, it remained disallowed. It remained to be claimed as a deduction because in that period there was no property available. If the property was not there, annual value could not be calculated. Hence, the interest for that period for which the property was not available, it was under construction. That interest, even if that interest was interest on housing loan, could not be claimed as a deduction. Interest for this period is known as pre-construction interest. Interest for this period is known as. So your period will start from, pre-construction period will start from date of borrowing, and it will end on, it will end on 31st March, immediately preceding to DOCOC. You will not end it on DOCOC. You will end it on 31st March, immediately preceding to DOCOC. What was your DOCOC? 30th June 2000 and what will be 31st March prior to that? 31st March 2024. So starting from this date, ending on 31st March, whatever period is there, this period is known as pre-construction period. This period is known as, and during this period, whatever interest is given, this is known as pre-construction interest. Yes or no? Hello. So now you will have to calculate this interest which you might have given for this period. Now tell me, how much was the loan? 10 lakhs. On 10 lakhs, you will have to first calculate the interest for 10 months, then 12 months, then 12 months, then 12 months. On the entire 10 lakh, you are supposed to calculate the interest for this entire period. Yes or no? See, if the repayments are done in between, so you will have to accordingly adjust the amount of loan. Hello. What if the repayment of rupees 2 lakh was made on 31st December 2022? So can I say till 31st December 2022 the interest will be calculated on 10 lakh. But after 31st December 2022 the interest will be calculated on 8 lakhs. Hello. This common sense should be there. Hello. But in my example, have I told you that there is some repayment? No repayment, meaning that for this 10 months, 12 months, 12 months and 12 months, for this entire period, how much loan was outstanding? 10 lakhs. On that 10 lakh, you might have given interest for 10 months also, 12 months also, 12 months also and 12 months also. Yes or no? Let's take this example that on 31st December 2022, 2 lakh repaid. How much is repaid? 2 lakh is. So tell me, can I say from 1st of June 2020 to 31st March 2021, how many months? And how much was the loan outstanding? 10 lakh. On that, at the rate of, how much was the interest? 1 lakh rupees. 1 lakh only, no? 10 lakh at the rate of 12% will give you 1 lakh 20. But you are not going to pay 1 lakh 20. You are going to pay only for 1st June to 31st March. Now can I say 1st of April 21 to 31st March 22. How many months? 12 months. During these 12 months also 10 lakh interest for 10 lakh loan was outstanding at the rate of. So you might have given 1,20,000 interest in this year also. Now in the year 22-23 you are supposed to be careful. Why? Because during 22-23 loan repayment has taken place amounting to rupees. On what date? So can I say from 1st of April 2022 to 31st December 2022 and then 1st of January 23 to 31st March 2023. This is your previous year 22-23. during this period of 9 months, the loan outstanding was 10 lakh at the rate of 12%, the interest will be 90,000. And for this period of 3 months, the loan amount outstanding will not be 10 lakh because you have already repaid 2 lakhs. So how much loan will be outstanding? On that, calculate 12% for 3 months. 8 lakh into 12%, 96,000. Hello? Into 3 upon 12. How much? 20. Can I say you have calculated the interest for this year also, and this year also? Now only for this year, till 31st March 2024, you are supposed to calculate the interest. Tell me, for these 12 months, 1st of April 2023 to 31st March 2024, how many months? 12 months. What was the loan outstanding now? Only 8, no? So on this 8 lakh at the rate of 12% will be 96,000. Have you calculated the interest from date of borrowing till 31st March immediately preceding to date of completion of construction? This entire interest you add. 4 lakh. 4 lakh. This is your pre-construction interest. This is your. And your law says that this pre-construction interest will also be allowed as a, but in 5 equal annual installments. So you are supposed to divide it by 5. 80. This will be allowed with effect from the previous year in which the construction was completed. When the construction was completed. So 86,000 will be claimed as a deduction for the first time in 24-25 because 24-25 was the year in which the construction was completed. So this 86,000, which is a pre-construction interest, 1/5 amount, first installment, first year will be 24-25, then 25-26, then 26-27, then 27-28, and then 28-29. Last in the year 28-29, this 86,000 will be allowed. Yes or no? But don't forget that your 8 lakh rupees loan is still outstanding. Yes or no? On that 8 lakh rupees of loan, the normal interest will become due in your previous year 24-25. You will have to pay the interest in 24-25 also. So tell me, in 24-25, can I say in entire year 24-25, the loan amount outstanding is 8 lakh. On that 12% will be, that 96,000 is the low interest which becomes due in which year? 24-25. That normal interest is going to be allowed, but along with that normal interest, 1/5 of the pre-construction interest will also be allowed. So how much will be the total interest? 96,000 plus first installment of pre-construction interest, 86,000. How much? So if they tell you that in the previous year 24-25, in the previous year, what will be the normal interest which becomes due in that year? What is the loan outstanding? 8 lakh is still outstanding. So on 8 lakh at the rate of 12% for the full year, 96,000 will be the normal interest for that year. But have you calculated the pre-construction interest? Yes. So 1/5 of this amount will be available with effect from the previous year in which construction is completed. So what is the year in which the construction is completed? 24-25. So in 24-25, this 86,000 will also be eligible. So can I say add 1/5 of pre-construction interest, first installment in this year, because this is the year in which the construction is completed. How much? Total 1,80,000. This is the total interest for this year now. Now, if your property is LOP or DLOP in this year, this 1,86,000 will be fully allowed. And if your property is SOP, this 1,86,000 will be allowed subject to limit. What limit? 30,000 or 2 lakhs? Why 2 lakhs? No. See, 2 lakh. Loan is taken on or after 1st April 99 for the purpose of construction, and construction is completed within from the end of the year in which the loan was taken in 2021. End of the year 1, 2, 3, 4 and 5. Within 5 years the construction is completed. So all the three conditions to take that 2 lakh rupees limit is satisfied. Hence, if this interest is there, yes or no, and if in this year the property is SOP, so this interest is for SOP, will be allowed subject to maximum limit of 2 lakh. This will be allowed fully. Yes or no? Easy or difficult? No, made easy. Say thank you. Now this calculation, you will be asked, these informations only will be changed. The amount will be changed, the rate will be changed, hello, the repayment etc. they will change. Other than this, there is nothing new in pre-construction interest. Yes or no? You just have to be careful. Don't end your pre-construction period on DOCOC, otherwise it will be wrong. You will have to end it on 31st March, immediately preceding to DOCOC. Because in this year, even if the construction is over on 30th June, whatever interest which will become due in this year, starting from 1st April till 30th June and 1st July to 31st March, whatever interest which will become due in this year will be allowed as a deduction in this year only, no? And if you take these 3 months as a part of your pre-construction period, then that 3 months interest will be claimed twice. Once as a part of pre-construction interest and second as interest for that year also. Getting my point? Bloody, if you are claiming that interest as interest for that year only, claim it as an interest for that year. Don't include that interest in the pre-construction period. Getting my point? Because if you will include that in pre-construction period also, then one interest from April to June, that 3 months interest you will be claiming twice. Once becoming due in that year and second as a part of pre-construction interest also. Hence, end your pre-construction period on 31st March itself. Don't extend it till DOCOC, because that interest will be taken care of in that year only. Getting my point, everyone? Sure, sir. So this was your interest pre-construction period. Okay. Now see, this is VVVVIP. Very, 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 very important. Now, do you remember one thing, that interest on housing loan deduction under section 24B for LOP or DLOP? Tell me. Unlimited amount is allowed as a meaningful amount is allowed as a yes or no? And for SOP, limited amount is allowed as a deduction. That limited amount is subject to 30,000 or 2 lakhs as the yes or no? Now pay attention, pay attention. If the assessee shifts out, shift out means not following 115 BSc, then you are going to do this. Assessee is shifting out of 115 BSc, following default scheme or not following default scheme, then assessee is eligible to claim deduction for interest. Assessee is eligible to claim deduction for LOP also, DLOP also and for SOP also, but for SOP it will be allowed subject to limit. But if they change this information, they tell you that assessee does not opt out of 115 BSc, assessee is following 115 BSc, assessee is covered by default tax scheme of 115 BSc. If they tell you this, hello, then you will lose some exemptions and deductions. If you remain in default scheme, your tax rates will be concessional, yes or no? So if you want to claim, if you want to pay tax at concessional rates, you will have to lose something. What you will lose? While calculating your house property income, you will lose the deduction of interest on SOP. You will still get the deduction for LOP and DLOP interest, unlimited. But forget about the interest deduction for SOP. Subject to limit of 30 or 2 lakh, the interest was allowed? No! Will not be allowed as a deduction if you follow 115 BSc. Will you remember this? Sure, sir. This is it. This was very important. In the exam, no, they will ask. Assessee, individual HUF, AOP, BOI, AJP. Following 115 BSc, not following 115 BSc. Deduction under 24B for interest on housing loan. For LOP, DLOP also available. For SOP also available, because you are not following 115 BSc. But if you are following 115 BSc, for LOP, DLOP, interest will still be available. But for SOP, the interest will not be available as a deduction. Done, sir? Next one. Now, section 25. Read this section and tell me what this section wants to tell you. Tell me. If you are liable to deduct TDS on interest, interest you are paying, no, interest is your payment. For you, that interest is your expense. But for someone it is income, no? That someone is outside India. So, someone is earning income outside India from you. What income he is earning? Interest income. Will he come to pay tax on that income? Can the government go there to collect the income tax? So you are the only person who can help the government collect that tax. So the government has told you, government has given you a responsibility that if there is an interest on housing loan which you are paying outside India, then make sure that on that interest, TDS which we are telling you to deduct, you have deducted that TDS and deposited that TDS to the government. By this way, you will help the government to collect the tax on the income of an outsider, which he might not pay. Yes or no? But what you have done? You have paid the entire interest without deducting the TDS. Or you might have deducted the TDS, but not yet paid that TDS to the government. TDS default you have committed. Now because of you, the government is losing tax revenue. Yes or no? So the government says that if the interest on housing loan is paid outside India, on that, if there is a TDS default, if there is a, meaning the TDS is not deducted or TDS is deducted but not deposited to the government, then whatever interest you have paid committing this TDS default, that entire interest will be disallowed, will not be allowed as a deduction under section. It will be disallowed. It is given in section number 25. Done, sir? So will you claim the deduction of this interest or you will disallow? You will disallow. Yes or no? Interest on which the TDS is not deducted, or it is deducted but not deposited to the government account. That interest will not be allowed as a deduction. Even if all the conditions are fulfilled, still it will not be allowed as a deduction. Done, sir? This was your section number 25. Now coming to 25A, this talks about recovery of arrears of rent of any earlier year, during your previous year, or unrealized rent of any earlier years recovered in this year. So this year you are recovering arrears of rent. But this rent does not relate to current year. This rent relates to earlier years. Yes or no? This year you are recovering unrealized rent. But this unrealized rent is not for this year. This is for any earlier year. So what will happen in this case? In this case, section 25A will become applicable. Which section will become applicable, guys? 25A says that for any earlier year, if there was some rent in arrears, there was some rent in which you have not shown as a part of actual rent of that year. Yes or no? Because you are not sure that whether you are going to get this rent or not. That rent might be in dispute. So you and your tenant were fighting about a rent. You were saying that no, the rent should be 50,000. Your tenant is saying no, the rent should be 40,000. He actually paid you rent of 40 only. But you wanted how much? 50. Hello? You wanted 50. He said how much? There was a dispute for entire 50 or only 10,000. So 40,000 you might have already shown as your actual rent. But that 10,000 for which there was a dispute, you never knew. You did not know at that time that whether the dispute will be resolved or not. Whether he is actually going to pay me that rent or not, 10,000. So you did not show that 10,000 as your actual rent only. Yes or no? Now this year the dispute got resolved. That tenant agreed to pay that 10,000 in this year. So can I say the 10,000 rent, hello, does not relate to this year. It relates to earlier years, earlier previous years. Yes or no? Which was never shown as my actual rent. It was never shown as my income of earlier years. But now that the dispute is resolved, 25A says that it will be taxable under the head house property only in the year of receipt. But after taking a standard deduction of 30%. Why? Because if you would have shown this amount as that year only, from this 30% deduction would have been allowed in that year, no? So you have not shown as a part of your actual rent in that year. You have not shown this rent as your actual rent in that year because there was a dispute. Dispute now got resolved. Now show this rent as your income under the head house property only. But take 30% standard deduction which you would have got that time also. Yes or no? Hello? Yes, this will be taxable under the head house property only. Even if the property to which this arrears relate is no more owned by you. So even if the property is not owned by you in this year, the property to which this arrears relates is not owned by you in this year. You have already sold that property 2-3 years back. Now do you own this property? No. But the arrears of that property you are receiving in this year, still it will be taxable under the head house property. As per section 25A. Ownership is not important now. Getting my point? Tell me, if you would have received this amount in that year only, where you would have taxed? So now you will change the head or head will remain same? Head will remain same. Got it, sir? But only take 30% standard deduction. Will you remember? Everyone. Now, unrealized rent of this year or earlier years? Earlier year, some unrealized rent happened. Meaning that it was a part of that year's actual rent. Unrealized rent is a part of actual rent which you cannot recover. So you eliminate while calculating your annual value. That's what we did, no? What we do? First of all, we consider the entire rent. Hello? In the calculation of annual value. First we calculate the entire rent, received as well as receivable. And now out of this rent, if some rent is not recovered, unrealized, then we eliminate that rent while calculating our GAV. Hello, sir? If we eliminate means this unrealized rent was first made as a part of your GAV calculation. This was your income. If you have satisfied all the 4 conditions, it is allowed to be eliminated from calculation of your GAV. Yes or no? First, you have shown it as a part of your actual rent in the GAV calculation. Yes or no? Now, if all the conditions are fulfilled, then it is eliminated. Then it is meaning that this much amount of rent which is already eliminated has not suffered any tax. Has not suffered any. Why? Because it was shown as a part of your calculation, but since you fulfilled all the conditions, you were allowed the deduction, meaning this much amount of income is not taxed. Now later on in this year, if you recover this unrealized rent, won't you have to pay tax on this? Yes. The amount of unrealized rent which was allowed as a deduction, which was allowed as a, on that you did not pay any tax. On that which you did not pay any. Later on, if you recover that unrealized rent, on that you will have to pay tax. Hello? But opposite is also possible. You have shown unrealized rent as a part of your calculation. You wanted to claim it as a deduction, but you could not satisfy all the conditions of rule 4. So it was not allowed as a deduction. It remained as an income. It was not allowed as a, meaning if it was not eliminated from the calculation, it remained as a part of your income. On that you have already paid tax. But now if you will recover, will you again pay tax? Ignore it. Common sense, which is very uncommon. Understand? Simple. Unrealized rent. What? Shown in the calculation. Shown in the, allowed as a, suffered tax or did not suffer tax? Now if you will recover, pay tax. Hello? But after taking 30% standard deduction. Getting my point? But wait. Unrealized rent shown in the calculations was not allowed as a suffered tax or did not suffer tax. Now if you will recover, don't pay tax. Getting my point? So this year, you are recovering some unrealized rent. This year, you are recovering some, that unrealized rent. If that unrealized rent which you are recovering right now, if that entire amount was allowed, that entire amount will be taxed. Why? Because it was allowed, it has not suffered tax. Yes or no? But what if that unrealized rent was not allowed? It was not allowed, means it has already suffered tax. So whatever unrealized rent you are recovering right now, to the extent which is taxed earlier, to the extent which is taxed earlier, meaning not allowed earlier, to that extent it will not be taxed. So out of your unrealized rent you will have to check, out of the recovery of unrealized rent you will have to check how much out of this has already suffered tax, how much out of this has already suffered, the amount which was not allowed earlier has already suffered tax. That I will reduce. That I will. So the balance amount which will remain, that is the same amount which was allowed earlier, which has not suffered any tax, will now be taxable, but after claiming 30% standard deduction. Will you remember? Now I will put some amounts so that you come to know, that what I am trying to tell. I am talking about 23, 24, last year. Last year only, Last year, the unrealized rent was, previous year 23, 24, unrealized rent was 40,000. How much? First case, huh? Listen to me very carefully. Allowed entire 40,000. Tell me. Allowed. Meaning, how much not allowed? How much not allowed? Meaning that this 40,000 was made a part of calculation last year. It was allowed. Meaning not taxed. Not taxed. Yes or no? Now, out of this 40,000, is there any amount which was not allowed? Not allowed means not allowed to be deducted out of calculation, meaning it is still there in your income. Taxed or not taxed? Taxed. So meaning that the amount of unrealized rent which was allowed, which is not taxed. The amount of unrealized rent which was not allowed, meaning it was already taxed. Yes or no? Now tell me, in the previous year 24-25, if this unrealized rent of 40,000, unrealized rent of 40,000 of earlier years is what? Recovered. Yes or no? Will you pay tax on this entire 40, or you will eliminate that amount which is already taxed? Definitely out of this you will eliminate that amount which is already taxed. So what was already taxed? The amount which was not allowed. So do one thing, unrealized rent not allowed. How much was the unrealized rent not allowed? Nil. So tell me how much remaining? 40,000 will be taxable. Understanding or not? Minus 30% standard deduction. Tell me how much? 28,000 will be the final taxable amount. Did you understand? First case everyone understood? Now second case. Please pay attention, please pay attention. How much was the unrealized rent? How much was the unrealized rent? How much was allowed? And how much was not allowed? Meaning you wanted that 40,000 should be allowed. But the department said no, 40,000 we will not allow. Keep that 40,000 in your calculation. Meaning on this 40 you have already paid. Yes or no? Now tell me, that 40 you have recovered now. That 40 you have. Out of this 40, how much was taxed earlier? The amount which was not allowed earlier is already taxed, no? How much was that? How much was that? Now how much remaining? Will you pay any tax? Will you pay any tax? Nil minus 30% will be nil only. Take 30% of nil on your calculator, you will get nil only. Hello sir. Second case everyone understood? Everyone? Third case sir, third case. Allowed 10,000. Not allowed. Possible, this is possible. Unrealized rent was 40, so you wanted that 40 should be allowed. But the department allowed only 10, saying that 30 you could have recovered. But you did not put efforts, so 30 was not received. If you would have put efforts, no. If you would have taken legal actions and all, you could have easily recovered 30. But since you did not put efforts and all, you could not recover 30. So we are not going to allow full 40, we are going to allow only 10, 30 we will not allow. Now tell me, out of 40, how much is already taxed? And how much is not taxed? So how much should be taxed now? So this 40 which you have recovered right now, out of this how much was already taxed earlier? The unrealized rent which was not allowed is already taxed. To that extent, whatever recovery is happening, I will not go and pay tax on that again. Yes or no? So remove 30. How much is remaining? This is the same amount. This is the which was not taxed earlier. From this, reduce. So what will be the balancing amount? Easy or not? Sure. Now the last case. Same. How much was unrealized rent? How much allowed? How much not allowed? 30. Surely no? Now tell me. Now this case I will twist your mind. How much was unrealized rent? 40. Is it necessary that recovery will also be 40 always? The tenant did not give me 40 last year. He did not give me. So last year calculation is this only. Okay, no? But this year I saw tenant on the railway platform. I saw him, he saw me. He started running, I started chasing. I chased. Running here and there. I chased. I grabbed him. Where are you running? 40,000 unrealized rent. Looking at me, running now? No. Give me my 40,000. He was not giving. I thrashed him here and there. I grabbed him and snatched the wallet out of his pocket, but I could recover only 35,000. Possible or not? Is it always necessary that the entire unrealized rent I will recover? Either I can recover entire or part of that I can recover, yes or no? How much part I have recovered now? Out of this 35, on how much I have already paid tax? 30 minus 30. How much will be taxable? Only 5,000. Yes or no? But minus 30% standard deduction. Yes or no? But wait. I grabbed him, I snatched his wallet, but from his wallet I was able to recover only 22,000. Not 22, let's say 25,000 only. How much? How much was the unrealized rent? Did I recover the entire 40 or only 25? Don't you think this 25,000 I will not pay tax? Because already I have paid tax on. To the extent of 30,000, whatever recovery happens on that I will not pay tax. Anything over and above, I will pay tax. So tell me, 25,000 out of this 30, will I pay any tax? Negative 5,000 will come. Meaning that I am not liable to pay any tax. If he gives me 5,000 more, on that also I will not pay any tax. Any recovery over and above this 30 will be chargeable to tax. Recovery up to 30 will not be taxable. Yes or no? So if the amount is coming negative, meaning the taxable amount is still 0. Got it, sir? Everyone? So this was your arrears of earlier year, recovered in this year, unrealized rent of earlier years, recovered in this year. In both the cases, one common point is, in the year of recovery, the amount will be taxable in the year of recovery only, on receipt basis. Hello? Under the head, house property only. Even if you are not the owner of the property to which this arrears or unrealized rent relates in the year of recovery. Yes or no? Hello? You might have incurred some expenses also to recover the unrealized rent, to recover the arrears of rent. Sometimes it is possible that for this recovery of unrealized rent or arrears of rent, you might have incurred some expenses. Ignore all those expenses. 30% standard deduction we are giving you, no? That 30% standard deduction will be enough. So any expenses incurred for the recovery of unrealized rent or arrears of rent will not be allowed separately as a deduction. Other than this 30%, no other deduction will be available. Will you remember this? Sure? Okay. See, this I have already given in note 1 and note 2. Now coming to section 26, property owned by. Co-owners means? Co-owners means. So now what happens? See, Up till now, we were saying that this one fellow is the owner of this property. One property, one owner. One property, one owner. Then there is no problem. Property is LOP, property is DLOP, property is SOP, property is partly LOP, partly DLOP. The income of that property will be entirely taxable in the hands of that one owner only. Yes or no? But sometimes it might also happen that the property has multiple owners. Multiple, more than one owner owning one property. One property, but owner more than one. There can be two owners, there can be three owners of a single property, yes or no? So that property is known as jointly owned property. Jointly, and all the owners of that property are known as joint owners or co-owners. You'll call them joint or co-owners. Now what will happen about this property? First of all, if this property is let out property. What? Forget that there was co-ownership. Forget it. Forget about the owners. Tell me, the property is let out property? Do you know the calculation of LOP? Calculate the income of let out property. Hello? Calculate the income of. Now this income will be split in the ratio of ownership. In the ratio of. The ratio in which the owners have ownership share in the property. But for that, the ownership ratio should be known. It should be known, or it should be ascertainable. That okay, both the brothers are the owner of the property, both the brothers are equal owners of the property. Meaning, share of each co-owner is known. And if not known, it can be ascertained also. Then do one thing, calculate the income and split that income in the ownership ratio. Split that income in the portion, the share and the share. For example, this is A and this is B. Each having equal share. 1:2. So 1/2 income will be income from house property for A, and 1/2 income will be income from house property for B. This entire income will not be taxed in the hands of A. This entire income will not be taxed in the hands of B. This entire income will be split in the ownership ratio. Whatever share which is respective to my ownership, yes or no, will be taxable as my income from house property. That amount only I will take in the computation of my total income. Yes or no? My brother's share out of this income will be treated as his house property income. It will be taken as his house property income in the calculation of his total income. Yes or no? Did you understand this? Now tell me, what if instead of LOP, this property is SOP? Possible? Hello? Now if half of the part of the property, is used by A as his SOP. Both are equal owners, no? So half part which belongs to A is used by A as his SOP, and half part which belongs to B is used by B as his SOP, meaning the entire property is SOP. Hello? Now what will you do in this case? You will not give the status of SOP to entire property. The SOP portion of A will be treated as his SOP separately. Yes or no? The SOP portion of B will be treated as his SOP separately. Getting my point? Because share is known and each co-owner using his respective share as SOP. Yes or no? So the share of the property used by the co-owner as his SOP will be treated as his separate SOP. Getting my point? Even though the property is one, but this property will not be treated as one. Respective share used by the co-owner is as what? SOP will be treated as his own SOP. This part used by B as his SOP will be treated as his separate self-occupied property. Did you understand this much? Now, see, if the loan is taken for this entire property. So the interest on this loan, can I say this interest is also related to entire property? Hello? Loan is taken for the entire property. So the interest is also related to. Now you will have to first find out how much interest relates to A's SOP and how much interest relates to. Interest relating to A's SOP, A will claim subject to his limit of 30,000 or 2 lakh. Interest which relates to B's SOP will be claimed by B subject to his own limit of 30,000 or 2 lakh. Please don't commit mistake over here. What many people will do, you know? Many people will take the interest, apply the limit, and after applying the limit, whatever interest will come, no, that interest they will split. Your answer will be wrong. You have to split the interest first and then apply the limit of each co-owner separately on that interest. Getting my point? Because the interest limit is not for a property. Interest limit is for an assessee. So for your respective SOP, how much was the interest that you claim for your SOP? Yes or no? Subject to your limit. So for that, first you will have to split the interest. And then on that interest, you will have to give the separate limit to each co-owner. Will you remember this? Sure, sir. Now next one. Next point. Now see, this A and B, both are the co-owners of a property. Yes or no? Now both are the ownership. Share. Not known. Or cannot be ascertained also. Possible? Possible. How come? I'll give you one example. Mr. X is there. He dies. But at the time of death, he wrote one will. In his will, he is writing that after my death, my property will belong to both my sons. Gone. But how much out of that property will belong to whom? He forgot to mention. Understanding? He did not even write that property will belong to both my sons and both sons will have equal share in the property. He did not mention all these things. Or one son will have 60%, another son will have 40%. He did not mention. If he would have mentioned, then the share is known or can be ascertained. Yes or no? But he just wrote that after my death, the property will belong to both my sons. That's it, and he died. He forgot to mention, he did not mention that out of this property, how much share belongs to which son. Yes or no? And it is practically impossible to give any assumption also. Sir, if nothing is mentioned, let us take half. Don't do it. This is not trying to commit suicide. This is suicide only. If you assume any amount, assume any percentage of share. Yes or no? So what will happen in this case? Come on, tell me. Now the share is not known. And even if you try, you cannot ascertain. In this case also, forget that there was some co-ownership. Forget that there is a co-ownership. If the property is, can you calculate the income? But now, you will not be able to split. Why? Because the share is not, or it cannot be. Now the income which is there, this has to be taxed. Just because the share is not available, the government is not going to leave this income. Government is going to charge tax on this income. But how much income out of this will be taxable for A, how much income will be taxable for B, cannot be known. Because the share is not known. Because this income has to be split on the basis of ownership share, which is not available, cannot be ascertained. So practical difficulty is there now. Understanding? Now what will happen, you know? This entire income will be taxable in the hands of A and B by giving them a combined status of AOP or BOI. Now out of this, some income will be taxable individually to you, some income will be taxable individually to B. Is not possible. Hello? Because share is not known. So if individually we are not able to charge tax on the income, combinedly from both of you we will take tax by giving you a status of AOP or BOI. Got it, sir? So both of you taken together, the government will call you what? Both of you will be given a status of AOP and BOI. Now both of you combinedly pay tax on this income. Hello, sir? Can this property be SOP? Yes. So in that case, the portion which you are having as SOP, portion which your brother is having SOP, it is already separate, no? Will be treated as separate property. So there is no difference there. Getting my point? Yes, hello, sir? But the difference will be in this. This was your section 26. Section 26. So you have to be careful at one place. Whenever this co-owned property is self-occupied, whenever this co-owned property is self-occupied by co-owners, self-occupied by co-owners, then each self-occupied portion will be separately treated as a separate property of each co-owner. And any interest on housing loan for the property will be first split, will be first apportioned to the SOP portion of each co-owner. Yes or no? And each co-owner will claim the respective interest of their share subject to their respective limits. Getting my point? Here only you can go wrong. Other than this, it is very easy. Section 26, section 26, entire discussion over. Yes or no? Now we'll discuss about composite rent or combined rent. This is the, after this we are going to discuss deemed owners, and after this one more concept of properties situated outside India. Yes or no? These three concepts are done, the chapter is over. I have done 100% coverage of this chapter. Everyone, 100% coverage is there. Now today, if you are going home and if you are not solving the questions, then it is your problem. It is not my problem. Okay? What all things are required to solve the questions, I have explained each and everything in detail. Okay? So pay attention. What is combined rent? Combined rent or composite rent? When two assets are given on rent together. One is property, another is other asset. So when you give building and other assets on rent together, or you can give building along with facilities. It is not necessary that building plus other assets will be given on rent together. Sometimes the building is given on rent with facilities, amenities also. Building with lift facility, building with watchman, 24/7 security facility. Yes or no? Club is there. Then a big garden is there, play area is there, lot many facility, 24/7 CCTV camera, security, lift, this, that, many amenities are there. So are you giving only building or building along with facilities? Building along with facilities, yes or no? So this is the part. But sometimes it might also happen that building can be given on rent with other assets also. Best example is this classroom. If somebody comes to me, for example, I am the owner of this classroom, and somebody comes to me and saying that, sir, I want this classroom on rent. Hello? So will I give the classroom on rent? Yes. But these assets will also be given on rent? No. Meaning these benches, this table, this chair, these lights, fans, this music system, this computer, AC, everything will go on rent. Yes or no? Now this example which I gave you, classroom along with this asset. Here one asset is let out along with other assets. Building is let out with other assets, and both the lettings are inseparable. Both the lettings are inseparable. One asset will be let out, automatically the second asset will go on rent. Both the lettings cannot be separately done. Yes or no? Hello? Letting of one asset depends on letting of another asset. Both the lettings cannot happen separately. So this is known as inseparable letting. What will you call it? One more example. I have a factory building. If someone is coming to take the factory building on rent, automatically the plant and machinery and other assets which are installed in the factory, automatically they will be let out. I cannot give only factory building on rent. Hello? If you want this factory building on rent, automatically you will have to take the factory building along with the entire machinery and all. Yes or no? This is inseparable letting. Classroom example which I gave, this is inseparable letting. Getting my point? Building is given on rent. Classroom, factory building is given on rent with other assets like plant and machinery in the case of factory building, like these benches etc., AC etc. in the case of classroom. So now one asset you are letting out or two assets you are letting out? Building along with other assets. Two assets you are letting out. Yes or no? And if both the assets you are letting out together, and for that one rent you are recovering, one rent you are getting, but in that one rent, some rent is for building, some rent is for other assets. We all know that if both the assets are going on rent and single rent is coming, that rent will include the rent of building as well as rent of other assets. Getting my point? Will you separate the rent or you will not separate the rent? You will not separate the rent because lettings were inseparable. Lettings were entire combined amount of rent, entire composite rent will either be taxable under the head PGBP or it will be taxable under the head IFOS, as the case may be. No need to separate the rent. Even if it is given in the question that out of the total rent, the rent of factory building was 80,000 and rent of the plant and machinery was 20. Even if they are giving it separately, don't separate it. Entire 1 lakh rupees of rent will be treated as PGBP or IFOS income. Why? Because the lettings were inseparable. If the lettings are inseparable, don't separate the rent also. Entire rent, PGBP or IFOS. But wait, what if the lettings are separable? What if the lettings are? For example, I have one 2 BHK flat. I have one 2 BHK flat which I want to let out. So I advertised that 2 BHK flat available for rent on an immediate basis. Monthly rent 25,000. So you are also searching a 2 BHK flat in West Mamlam. You came across to this advertisement. You called me, sir, I saw your advertisement that you have a flat in West Mamlam which you want to let out for 25,000. I want to see that flat. I said, okay, come. You saw the flat. You like the flat. Now you are taking that flat on rent from me. How much rent you are going to pay? 25,000. Okay, no? But along with that, I offered you that, see, if you want I have one car also. See, in the parking space below na, in the building, parking space below, see this car is there, this car is mine only. That parking space is also mine, and that car parked in that parking space is also mine. So if you want, you can take my car also on rent along with my flat and give me a total rent of 30,000. 25,000 for a flat and 5,000 for car. Now, am I letting out a building along with asset? Both the lettings are inseparable or separable? There was no requirement that building will be let out only if the car is taken on rent, or the car will be let out only if the building is taken on rent. One asset let out, automatically other comes? No. Both the lettings can be done separately. But still, I have let out both the assets together and getting one rent. This is a combined rent which is coming by letting out building as well as other assets. But letting of these two assets was separable. So compulsory, now I will have to separate the combined rent. Now I will have to separate the part of rent which relates to my building will be taxable under the head house property, and the part of combined rent which relates to other assets will be taxable under the head IFOS. Will you remember this? Combined rent for building and other asset. Composite rent where the letting of both the assets was separable. Some attributable to use of building will be taxable under the head, and some attributable to use of other assets will be taxable under the head. If the letting was separable, you are supposed to separate the rent. Yes or no? But if the letting was entire composite rent, don't separate it. Entire composite rent will be taxable under the head IFOS or PGBP. Easy or difficult? Will you remember this? Now, what if the building is given on rent along with facilities, amenities, etc.? Definitely, the rent which you are going to charge from your tenant will not have the rent of the building only. Definitely, the cost which you are bearing for those facilities, those costs also you will recover, no? Lift maintenance charges, security charges, then clubhouse charges, every expense you will incur as an owner, hello? But will be enjoyed by your tenant. So are you going to charge only for the building, or you are going to recover that cost also along with the building? Understanding? So if the building is given with facilities, cost of those facilities will be met by you. So definitely the cost of those facilities which you are meeting, you are going to recover that cost also along with the. So whatever rent is coming to you, no, that automatically includes that cost. That automatically includes cost of the facilities. Do one thing, cost of facilities cannot be taxed under the head house property. Separate it. It will be taxable under the head IFOS. Only the cost, only the rent remaining after excluding this cost of facilities, yes or no, will be taxable under the head house property. Will you remember this? This was your composite rent. Now coming to deemed owners. There are 5 cases. There are, in all these cases, even if you are not the owner of the property, see, it is compulsorily required that if you want to bring some property under this head, you must be the owner of the house property. Owner means legal owner. Yes or no? But sometimes, even if you are not the legal owner of the property, still the income of the property will be taxable in your hands only, because in this case, we treat you as a deemed owner of the property. It is better to charge this income of the property in your hands, considering you only as the owner of the property. Yes or no? So all those cases are given in section number 27. Section number 27 talks about deemed ownership. Talks about, now first case, individual is there. That individual has transferred the property to his spouse without taking adequate consideration and without an agreement to live apart. So for example, this individual has gifted the property to spouse. Staying with the spouse. Hello? Staying with the spouse, there is no agreement to live apart. You and your spouse are living together. And bloody you have not taken any consideration also for transferring your property to spouse. Meaning you have gifted the property to your spouse. Why you have done this? To avoid paying taxes. Because you are already an assessee who is a rich assessee, already earning total income more than 10 lakhs. Now you know that if you are earning any income, that income is going to be over and about 10 lakh. On that you are supposed to pay 30% tax. Because the tax rates over and above 10 lakh is 30%, no? Hello sir. So you know that whatever income you are going to earn is over and above 10 lakh, and on that you are supposed to pay how much tax? 30%. Sir, understanding sir? Now on that property, on that income, if you are supposed to pay tax at 30%, meaning that you want to earn the income, but since on that income 30% tax is payable, that pinches you somewhere. Why not to have that income and not pay tax? Why not to have that income but pay less tax? So you applied some mind. What you did? There was one property giving you a rental income of 5 lakh rupees. How much? You know that this 5 lakh is coming on your name because the property is owned by you. So the rental income will be coming on your name, 5 lakh rupees, which you will have to show in the computation of your total income, and that will suffer 30% tax. 5 lakh, 30% tax will be 1,50,000 tax. So you applied some mind. 5 lakh coming to me, property, I am the owner of the property, income of the property is coming to me, but I am paying 30% tax. Idea, I will give the property to my wife. Property has left me, but is still with me. But now only on the name of my wife, because wife stays with me. I still have the control over the property, because I have a control over my spouse. Hello? Me and my spouse staying together. So property has not left me. Property is still with me, but earlier it was on my name. Now it is on the name of my spouse. It is a separate individual, yes or no? But property is still with me, in my control. Now the income is still coming at my home only, but not on my name. Now the income is coming at my home, in my control, on the name of my spouse, because there is no agreement to live apart. Got it, sir? So tell me, now this 5 lakh rupees income will be income of my spouse. Now total income of my spouse will be calculated. In that total income, this 5 lakh will be included. My spouse will not pay a single rupee of tax on this. For first 2,50,000 basic exemption limit, another 2,50,000 5% tax. Hello, 12,500, and up to 5 lakh if the total income is there, rebate is available. 12,500, no tax. Just imagine, simple trick, and I have saved 1,50,000 rupees of tax. Now if I have saved, don't you think that the government has lost 1,50,000? If the government is losing 1,50,000 tax by just doing this transaction by me, just imagine, out of this 150 crores of population in India, if only 10,000 people start doing this, only 10,000 people, out of 150 crores population, only 10,000 people will start doing this. 10,000 people saving 1,50,000 rupees of tax. Multiply on your calculator. Multiply. Thank God your calculator is not showing any error. 150 crores. This much will be the tax revenue loss to the government if nothing is done for this. Hence, section 27. Sir, you have transferred your property to your spouse, no? Without adequate consideration, without an agreement to live apart, no sir? We know why you have done this. We know why you have, so that the income does not get included in the computation of your total income, so that you don't have to pay tax on this income. Sir, if you do this, no, there will be a tax revenue lost to us. So, to catch you doing all these things, who is the legal owner of the property now? Since you have transferred the property to your spouse, who is the legal owner? But whenever the house property income will be calculated for this property, you only will be the deemed owner. The person who has transferred the property shall be the deemed owner, meaning the income of that property will not be taxable in the hands of your spouse. It has to be taxed in your hands. That is possible only if we deem you as the owner of the property. Did you understand the logic? Hello? So if there is an individual who has transferred the property to his without taking adequate consideration or without an agreement to, so for that property, for that transferred property, this individual, transferor individual will only be deemed to be the owner. So income of that property will be taxable in the hands of that individual only who has transferred the property. Yes or no? Now see, to avoid this shit, if I will transfer the property to my spouse, there will be no benefit because they will treat me as a deemed owner. So me and my spouse did family planning. Small, minor child came. Minor. Now, instead of transferring the property on the name of my spouse, I transferred the property on the name of my minor child. Where is my minor child? At my home only, no? And he is a separate individual, although very small, but he is a separate individual. Now, without taking adequate consideration, if I am transferring my property on the name of my minor child, without taking adequate consideration, if I am transferring the property on the name of my, gifting my property to my son, now he becomes the legal owner. Income will be taxable in his hands. Hello? Still I am not paying 30% tax. Getting my point? I can do this also, no? To escape from this point, I can do this also. Yes or no? So the government caught me here also. That if any individual has transferred his property without taking adequate consideration to his minor child, then for this property also, this same individual will be treated as deemed owner. Income will not be taxable in the hands of minor son, income will be taxable in the hands of transferor individual only. Hello sir? Because he is the deemed owner. But this concept of deemed owner will be applicable only if this minor child is not a handicapped minor or not a minor married daughter. Not a handicapped minor, not a minor married daughter. The logic you will get in clubbing. Right now I will not give you logic. Okay, no? Only remember, any minor, any other than handicap, other than minor married daughter. To this minor, if you have transferred, only then you are treated as deemed owner. Yes or no? But if you have transferred to handicap minor, you will not be treated as deemed owner. If you have transferred to minor married daughter, you will not be treated as deemed owner. And why that is done, I will tell you in clubbing. Don't worry about that. Okay? Hello sir? So two cases. Now pay attention, pay attention. Individual has a property. Individual has a property which he is transferring. Only then the individual will be treated as. What if individual does not have a property, individual has money. And by that money was gifted to spouse or minor, and from that money the property is bought. Will the individual be treated as deemed owner? In order to be treated as a deemed owner, individual should have a, which he is transferring. Only then the deemed owner concept will be applicable. But if I don't have a property, I have money. That money I am gifting to my spouse or minor child. And from that money which I have gifted, a property is acquired by my spouse or minor child. For that property I am not the deemed owner. Section 27 is not applicable. Sir, then everyone will start doing it. No, don't worry. It will be taken care of in clubbing. So the income of that property income of that property will be clubbed in your hands only. No need to deem also. If we deem it, it will be taxed twice. Once by applying clubbing provision and second by deeming you as owner. We are not deeming you owner for such kind of properties. Why? Because already that income gets taxed in your hands by applying the clubbing provisions. Got it, sir? So in the clubbing, no, I will bring this point to your notice again. That time I will tell you, see in the house property chapter I have already explained this. That time you will connect the dots. Okay, no? Right now, did you understand these 2 points? Now if the assessee, he can be any person, he is the holder of any impartable estate. Then being the holder of this impartable estate, not the real owner, he is just the holder of this impartable estate, still the assessee will be treated as deemed owner. What is impartable estate? Impartable estate means a property which could not be partitioned. Meaning, for example, Mr. X is there, he is dying. At the time of his death, no, he transferred all his properties, all his assets to his 3 sons, except for one ancestral property. There was an ancestral house which was not given to any of the sons, because that ancestral house had, memories of everyone. Mr. X wanted that ancestral house to be enjoyed by all the sons. So it should not be partitioned. Yes or no? So Mr. X did not give this ancestral house to any of the brothers and he died. That is a family house. Everyone enjoys, all the brothers and their family enjoy this house together. But there will be one person who will have the control over that house. There will be one person who will take the decisions of that house. Yes or no? See, in Indian culture, no, what happens when the father dies, no, the eldest son of the family becomes the head of the family. Yes or no? So the eldest son was Mr. A. Now Mr. A, being the eldest son, now the head of the entire family, takes the decisions with regard to this house. Yes or no? He is still not the legal owner, but he is just the holder or the caretaker, taking the decisions about that house. Yes or no? What if this house was given on rent? What if this house is giving some income? There has to be someone who should pay tax on this income. So who should be held? The holder. The person taking the decisions with regard to this house. Yes or no? So even if he is not the legal owner, but for the purpose of section 27, this assessee who is the holder of this impartable estate for this property, this holder only will be treated as deemed owner, even if he is not the legal owner. Yes or no? Now, sometimes sale agreement happens. Buyer is there, seller is there. Yes or no? If buyer-seller agrees to buy a property, you are a buyer, I am a seller, there will be a sale agreement between you and me. So, we decide that I am ready to sell the property for 50 lakhs. You also agree to buy the property for 50 lakhs. Yes or no? You have given me the entire consideration. 50 lakhs you have given me, or you have taken the liability to pay 50 lakhs and I have given you the possession of the property. Sale is complete in all aspects. You have performed your part of contract, I have performed my part of contract. What was your part of contract? That you will pay me the consideration. You have paid or you have taken the liability. Yes or no? And what was my part of the contract? That I will give you the peaceful possession. Yes or no? So with regard to any immobile property, including a building, if there is such type of agreement where both the parties perform their respective parts, yes or no, then even if this sale agreement is not actually registered, still the buyer will be treated as deemed owner. The legal ownership is yet to be transferred. Legal ownership will be transferred only if the sale agreement gets registered in the registrar's office. We have not yet gone to registrar's office. Yes or no? Maybe we are saving stamp duty, or maybe we are taking some time. So till the time the agreement will not be registered on your name, you will not become the legal owner. When you will become the legal owner? When the agreement gets registered on your name in the registrar office. Hello? It might take some time. 5 months, 6 months, a year, sometimes 2 years. Sometimes the buyer and seller does not get registered also. I will assign a power of attorney, that's it. Why? Because the value of the property was in crores. And if we go and get the property registered, what will happen? Stamp duty will be paid. Huge amount of stamp duties will be paid. So the buyer and seller does not get the property registered also sometimes. Power of attorney is given. But see, no, the sale is complete in all aspects. Now, even if in the legal records, the seller is still the legal owner, but does the seller have any control over the property? No, entire power of attorney, entire possession and everything goes to the buyer. So are you a person? Are you a buyer? Are you a person? Acquiring the possession of the property? So you have acquired the possession of the property only, not acquired the legal ownership. But if you acquire the possession of the property like this, you are as good as the owner. All the risk, all the rewards of the property has already been transferred to you the moment I have given you the possession. So now who should be treated the owner of the property? You or myself? You only. Yes or no? So the assessee who is allowed to take or retain the possession of the property, yes or no? Even without registering the legal documents, yes or no? Even without registering the legal documents or title of the property, the person who is taking the possession of the property, even if he has not yet become the legal owner, for this property he will be treated as deemed owner if he has performed his part. What part? He has paid the consideration, and the seller has performed his part. He has given the possession. So even if the documents are not registered, even if the legal ownership is not transferred, still the person who has taken the possession will be treated as deemed owner. So now the income of the property will be taxable in the hands of the buyer, even if he is not the legal owner, by treating him as deemed owner. Yes or no? Now, if there is a lessee and there is a lessor, there is a lessee and there is a, what the lessee is doing? Leasing the property. Lessee is leasing the property for a period of 12 years or more. This is known as long-term lease. This is known as long-term lease. Whenever the long-term lease happens, whenever long-term lease happens, 12 years or more, at that time, the lessee, gets the exclusive right or the control over the property. Right of occupancy, right of control is with lessee now. Lessee will pay a huge amount as a lease premium. He is not buying the ownership. He is not taking the ownership of the property. Yes or no? He is just paying the amount, a lease premium amount, which will be a very, decent amount. So I am coming to you. Sorry, you are coming to me and telling me, sir, give your property on a lease of 20 years. I said, okay, no problem, take the property for 20 years. Sir, you are not supposed to interfere in the property for next 20 years. I want exclusive rights, as if I am the owner of the property for 20 years. After 20 years, the property will come back to you. After 20 years, you are the legal owner also, and you have all the rights of the property. But for first 20 years, for the period for which you are giving me the property, for these many years, these 20 years, you will not interfere in the property. I will say, okay, no problem, give me 1 crore rupees right now, lease premium. See, the property is very costly. If you want to buy this property, this might cost 10 crores. But right now, that 10 crores worth of property is available to you for only 1 crore to be used for 20 years as an owner. Getting my point? So all the rights in the property will now come to you. Even if I want, I cannot come to the property. I cannot do any interference in the property now. All the rights of ownership are passed on. Getting my point? So the moment this type of lease is given, now I will only be the owner on the paper for these 20 years, legal owner. But for these 20 years, now lessee will enjoy the property as if the lessee is the owner. So Who should be the deemed owner? This lessee who has taken the property on lease, long-term lease. Getting my point? So this was the last point which you are supposed to remember. These cases, 5 cases, any case is there, the assessee is the deemed owner. Will you remember this? Now, the property which was situated outside India. Property which is situated. Tell me one thing. Income is accrued if it is received in India. When the income will accrue, first of all tell me, the property which is situated outside India, if that property is LOP, let out property. So will it give me rental income? Yes or no? That rent is accruing outside India. If it is received in India, irrespective of my residential status, ROR, RNOR, NR, it will be my Indian income. LOP, Indian income. Entire income will be taxable under the head house property, and the income will be calculated as if the property is situated in India. Yes or no? In the same manner in which I calculate for LOP. For this property also the same calculations will happen. Hello sir. But wait. What if the property is situated outside India and the rent is also received outside India? Accrued outside India, received outside India. Part A or part B? Part B, foreign income will be taxable only if the assessee is ROR. For RNOR, NR, it will not be taxable. But the taxability of this property will happen in the hands of ROR as if the property is situated in India. Meaning that how you calculate for LOP, in that same manner, the income of this property will be calculated. But remember, all the figures will be in foreign currency. Yes or no? So the entire value, entire income has to be calculated in foreign currency, but final amount of income has to be converted into INR. And how will you convert it? By applying the exchange rate. Exchange rate as on the last day of the previous year. Exchange rate as on the last day of the previous year will be applied. And that exchange rate which you will apply, no? Hello? Will always be given in the question. Understood this thing? But wait, one simple thing I will ask you. Municipal value? Local authority situated outside India. The municipal value will be available. Fair rent of that locality. Yes or no? Standard rent of outside India. Expected rent will come. Actual rent will come. Hello? Then you will compare. You will get GAV. Any unrealized rent you will reduce. Final amount of GAV. Out of that you are supposed to reduce municipal taxes, which you must have paid to a local authority situated outside India. Will you get any deduction for that municipal tax? The answer is yes, because you are calculating the income assuming as if the property is situated in India. Yes or no? So if the bloody income is getting taxed in India, then why not the municipal tax deduction should be available? Even that municipal tax deduction will be available, even if it is paid to a local authority situated outside India. Yes or no? Hello sir. This was Madras High Court judgment which I have just now explained. Municipal tax deduction also you will get. Okay, no? Now final income will be converted into INR. If the property is LOP, you are going to do this. What if the property is SOP? What if that property is SOP? What will you do with that property? If SOP, no, and your status is RNOR or NR. RNOR or? You are not going to do anything. Ignore. But if the property is situated and your status is, its annual value can also be exempt, because annual value of any two SOPs at the option of the assessee is exempt. It is not said that annual value of two SOPs in India only will be exempt. Hello? Annual value of any two SOPs, whether in India or outside India, can be exempt in the hands of assessee at the option of the assessee. What if two SOPs you are exempting and both the SOPs are in India? Then that third SOP which is outside India, it will be treated as your DLOP and its annual value will be taxable in your hands if you are ROR. Yes or no? What if that property you are claiming as exempt, then one more property you can claim as exempt, whether in India or outside India. Rest all the other properties will be treated as DLOP. Will you remember this? Sure. Today go home and start solving the question. 1 or 2 questions I'll pick up tomorrow. Okay, no, 1 or 2 questions I'll pick up tomorrow, and tomorrow we are going to start with salary. This chapter comes to an end. Did you enjoy this chapter? Yes, everyone, see you all tomorrow. Bye bye. Bye. Interest will also be allowed in the same manner. No, all the calculations will remain same. Nothing will change. Even the interest which you might have paid to a bank outside India, that interest will also be allowed as a deduction. Yes or no?